Hey, what's up guys? Welcome back to another video, and today I'll be going over ICT's power of three: accumulation, manipulation, and distribution, AMD for short. Now this concept is one of the most powerful concepts in Forex. Like, I'm not exaggerating at all. Once you're able to master how AMD works in the market, you will have an edge over every other trader. You will be able to predict price action way better than you currently do. So in this video, I'm going to do my possible best to simplify how AMD works in the market. And of course, we'll be checking out some examples from the lower time frames up onto the higher time frames. Now, all that being said, let's get straight into this. Okay, so first off, the ICT part of the concept begins from a candle on the higher time frame, the daily time frame to be specific. At least that's what the ICT said himself. But I believe you can find AMD in action in any time frame. Anyways, let's check out this example real quick. So this is a bullish candle. Okay, so let's assume this is a candle from the daily time frame, right? So we have our open, we have a low, we have the close, and we have the high. Now let's say you go down to the lower time frame, right? In this one single candle, now we assume this is the daily candle. So if you go down to the lower time frame, like let's say the 1 hour time frame or the 15 minutes or the 5 minute time frame, you will actually find structures inside of this candle. Now the AMD concept doesn't occur on every single candle, right? You're not going to find it in action in every single candle, but sometimes, occasionally during like Monday trades, you will find AMD a lot. Okay, let's see how this works. So first off, you have your accumulation right here. This is your accumulation. So this is our accumulation, and then we have the manipulation. Now this is our manipulation, and we have the distribution. Okay. So as we all know, on the smart money perspective, we all know that price is being manipulated by the institutions, by the banks, right? So obviously price doesn't just go on one single direction. So what banks and institutions do is that they manipulate the retail traders. So this is basically manipulation. So price just keeps staying on one position, right? So price keeps going up and down, up and down. And this is the first phase of AMD, right? And suddenly, let's say price, is on the bullish momentum, because this is a bullish candle, right? So price is definitely going to keep going all the way bullish. But the banks and institutions always love to manipulate the retail traders. So they just keep price in one position, right? So after price has stayed on one position for a while, they take price all the way down. Now this is the next phase, and this is called the manipulation. Now what most traders end up thinking is that, okay, after the manipulation, price is not going all the way down. So they believe price is now on a sell. So a lot of people just, start selling, start setting the sell stops, the sell limit, but they don't actually know that they're being manipulated by the market. So what ends up happening is that from this point right here, price starts to go all the way bullish. So basically, price will stop out every single buyer who have entered into the accumulation area, right? So price stop out every single buyers who have entered in the accumulation area, and price stop out every single sellers as well who have entered in the manipulation area, and price starts to expand all the way bullish. So this is basically distribution, right? So we have the accumulation, we have the manipulation, and we have the distribution. It's very simple. So as you can see from this open right here, there was a manipulation, right, on the lower time frame, that is, because this, we are assuming this is a daily candle. So there's a manipulation, right, and price goes all the way down, then price starts to go all the way bullish, and immediately price goes above this open, it forms a wick, right? It forms this wick right here, and price starts to go all the way up, distribute all the way up, and eventually price, retraces it down a little bit to form this upper wick right here. So it's very simple. Now for a bearish scenario, it's literally the same thing, but just the opposite, right? So for a bearish candle, we have the open right here, we have the high, we have the close, and we have the low right here. So when price opens, right, there's a manipulation, okay? So this is our manipulation. So price just stays on one single position. So most people who are entering the trade in this area don't actually know where the price is going. So some might eventually enter a buy, some might enter a sell, but either way, they're all going to get stopped out. And the next phase is going to be the manipulation. So price will go up. And by the way, in ICT concept, sometimes we do call this the Judas swing. So price goes up as if it's on a bullish trend. was actually a fake out, right? So most retail traders will think price will start to go bullish and they enter a buy. At the end of the day, price will start to go all the way down. Now, this is your distribution. So this right here is your distribution. So you can see we have the accumulation, then price goes all the way up, then we have the manipulation. So a lot of people, think price will keep going all the way bullish and they enter into this position right here. And the banks, drive price all the way down. Now this is your distribution. So we first have the open, right? Then price did a manipulation, then price goes all the way down below this line right here. So we have our week, then price goes all the way down and we trace this a little bit, then we have our lower wick. So it's basically simple. It's not complicated at all. Okay, so this is going to be our first example. This is the gold dollar and we are currently on the 15-minute time frame. Okay, so all this price action happened just in one day. Now this is the open and this is the close. As you can see, this is the Monday open on the 31st of March and this is the Monday close, which is basically the Tuesday open, which happened on the 1st of April. Okay, so we have our accumulation right here. Okay, so this basically is our accumulation. So as you can see, price isn't on any trend. Price is just, going up, down inside of this range basically. So after the manipulation, as you can see, there was an impulse bearish momentum all the way down. So this basically is our manipulation. So immediately the price goes all the way down, you instantly know you have to look for a way to find a trade setup. Now, what most people do, is when they want to enter, they just use this right here. They just set their entry just anywhere here. So just their stop loss and just set their TP just anywhere they like. But this isn't actually how it works, right? So whenever I use the AMD concept in the market, I like to see an extra confirmation. I don't just say, okay, this is my accumulation, this is the manipulation, and just get into a trade just like that. No, I had to look for more confirmation. So what I wait for is a break in market structure. So as you can see, there was accumulation right here and price came all the way down and this was the manipulation. So this was Monday, right? So a lot of people will have thought, oh, price is now on a bearish momentum, let me start to sell. So a lot of retail traders were deceived into get into sales until price just with an impulse move started going all the way bullish, stopping every single sellers out. So when you want to find a trade setup, you just have to wait for a break in market structure. And this right here is a very good break of structure. This right here. So as you can see, this itself is a range. From this high up onto this low itself is a range, right? And this is a high, a lower high to be specific inside of this range. Now this is a break of market structure. Now which other block was responsible for breaking the high? This is the other block responsible. This other block right here is the perfect other block we need to use for our trade setup. Now this is the 15 minutes time frame. So what this basically means is that we can actually go down to the lower time frame to reduce our other block. Let's see if we can refine our entry on the 5 minutes time frame. Okay, so on the 5 minutes time frame, if we actually take a closer look, you can see that all this right here is just fair value gap. All this right here is just void. So basically we can actually reduce our entry down to this other block right here. Okay, so this is going to be a buy. We're going to set our entry right here. I'm going to put our stop loss just right here. So where are we going to set our TP? Now guys, remember, we are trying to trade the candle of a daily time frame and this is a Monday open. So most times in scenarios like this, what I just do is to just set my TP at the close of the day, which is this area right here. So just in a single day, I can find over 1,000 pips on gold just by using the AMD concept. So it's very crazy. So all you just need to do is just patiently wait for accumulation to occur in the market. Then you see price, forming the manipulation, and then you start to look for a break in market structure. So immediately you see a break in market structure, you use the order block responsible for that breaking structure, and you set your trade setup. So it's basically simple. Okay, so moving on to our next example, this is the gold USD. So when you take a look at this price action, what do you notice? So as you can see, this is our accumulation. So as you can see, price is just on a single position, just going holding up, just going down, doesn't have a specific trend or whatsoever. So next we have our manipulation. So price taps out every single sellers, who entered at this level. So there was a sudden expansion all the way up. So a lot of retail traders might think, price is now on a bullish momentum. Let me start to buy, let me start to enter the market. But at the end of the day, what price ends up doing is reversing. So this basically is our distribution, right? So price starts going all the way down. So basically, price taps out every single sellers on this level, and price taps out every single buyers on this level. So it's basically simple. Now, again, if you want to enter into this trade, you have to wait for an extra confirmation, which is a break in market structure. Now we have a break in market structure right here. So this is a low, right? And this low was broken by this other block right here. Now let's take a closer look if you can actually, let me get into this right here. Okay, so you can see this was the other block responsible for breaking that low, right? This other block right here. So we have a bias, right? So we know price will start to go all the way bearish, and we have a breaking market structure. So this is the other block we're going to use for our trade setup. Now this is going to be a sell. We're going to enter from this point right here, and this is going to be our stop loss. Okay, now how are we going to set our take profit? What you have to just do is to look at price action from a bigger perspective. So all you just need to do right here is to just use this right here. So this basically are equal lows. This right here are equal lows. So basically this is liquidity. And this old structure, this old structure formed on, I think, Thursday. So there's going to be a rally, right? So all these are basically liquidity. These are equal lows. So price will go all the way down to tap out this equal low. So it's very simple. All you have to do is you just set your TP up onto the slope right here. And this is a massive 1 to 8 risk to reward ratio. So basically price accumulates at this position, goes all the way up a little bit, and we have a manipulation, and price starts to come all the way down. So you patiently wait for a break in market structure and you get into the trade and you set your TP at the next liquidity, and you have a massive perfect 1 to 8 risk to reward ratio. So it's very, very simple. Okay, so for the next example, we're going to be going up to the higher time frame. Now we're still in good USD. This is currently the 1 hour time frame. Okay, so as you can see right here, this basically is accumulation. All this right here is accumulation. I think it started from like Tuesday up onto like Friday. So this happened during the whole week. It was just accumulation, price just remained in the same position for a whole week. And after a whole week of accumulation, as you can see right here, this is Monday right here. As you can see, price goes all the way down. Now this is our manipulation right here. So this is a manipulation. Price goes all the way down. So this was basically Monday's Judah swing, right? This is Monday's Judah swing. So price is definitely going to go all the way down. But not only that, the other confirmation we have is on the macro level. So as you can see, on the macro level, price has been going all the way bullish, right? And there was this retracement right here. Okay, so price came all the way down right here, and price will definitely continue to go all the way bullish. So price is on a bullish momentum. So those who don't have that idea, right, those who don't know that price will keep going all the way bullish, they think, okay, price has broken out of this accumulation right here, then price will start to go all the way bearish. But at the end of the day, they get stopped out as price begins a new sudden expansion all the way up. So this basically is our distribution, and as you can see, price is just expanding all the way bullish. And it's actually crazy because this is a 1 hour time frame. So you can just simply go onto the lower time frame, like the 5 minutes time frame, the 15 minutes time frame, and look for entries wherever you can find a break of structure. It's very simple. Okay, so moving on to our next example, this is the 1 hour time frame of USD/JPY, and as you can see right here, this is basically all accumulation. Now this happened during a whole single week, right? So this was from, I think, Monday up onto like Wednesday, right? So after Wednesday, after the Trump tariffs announcement, there was a big rally all the way down. So this basically is your accumulation, and this is the manipulation. As you can see, price tapped out every single sellers above this place before price started to go all the way bearish. Now this is a bearish trend. This basically is your distribution, right? So price distribute all the way down. And by the way, this is a 1 hour time frame. So this is very crazy. This is massive. You can simply go down, to the 5 minutes, to the 15 minutes time frame, and look for a lot of entries in this position. Now, this was a massive bearish rally all the way down, all from Thursday into Friday. So basically, AMD is not only found in the small time frames like the 15 minutes or the 5 minutes, like everyone says. You can also find AMD, on the higher time frame, like the 1 hour, the 2 hour, even on the 4 hour. So it's basically simple. Now, I hope you find this video helpful. If you have any question at all, you can ask in the comment, or you can just simply reach out to me on WhatsApp. And if you're yet to subscribe to the channel, make sure to smash the subscribe button. Thanks for watching this video, and see you guys in the next one.